With the S&P 500 breaking above 1,000, can it stay there or does it turn around? Does the economy's performance actually support these equity valuations? Let's find out. Let's bring in Dennis Hines. He is the chief market strategist at R.W. Pressbridge. Dennis, good to have you with us. Thanks very much for coming in.
Nice to be with you.
Now, before we get to the S&P 500, I want to ask you about the correlation with China, because that's something that you wrote about in the most recent report. Tell me, what is going on in China, and why do we have to pay attention to the Chinese markets right now when we look at overall equity values?
Well, firstly, global equity markets are always interrelated. They have been. Typically in the past, it's always been the U.S. market which has been driving everyone else, driving Europe, driving Japan, driving Asia in general. There's been a change, however, and it's essentially it began in October of last year when we had China, with its massive stimulus program, take itself out of recession and even worse. But it was October where it established its bottom, and it in fact set the directional tone for our market as well, which we didn't take the hint until March of this year.
And so would you be buying, at least at this point, would you be buying, let's say, ETFs on the Chinese stock exchange right now?
I would, but there is, as oftentimes happens after you break out, what's really happened here is that I think what's more telling is that policymakers in China several weeks back said that lending was entirely too high, too big. We need to constrain that. So as it turns out, China typically front ends its lending in the first half, but it had dictated to its banks that they should be reducing the lending to avoid an asset bubble, whether it be in stocks or whether it be in housing. And the bankers dutifully responded. We had the second largest bank in China reduce its lending by 77%. Now that, in fact, tells things. That tells investors on the margin. That means that China doesn't want to go any higher, and in fact it didn't. On August 5th, we began this 20% sell-off, which defined a bear market, which in fact stopped on Wednesday. We were thinking now, we're going to follow this now because we had been leading, now they're leading, so we expect to see the market going lower. After a couple of serious disappointing reports that we had confidence had been reduced, leading indicators, but then we had this these great housing numbers, which have in fact, it's actually the Philly Fed, which prompted some short covering on Wednesday on Thursday in our market, and then we had China reverse rolls, and they followed us.
So you have a sort of a piggyback effect. On the one hand, the Chinese market looks like it's rebounding, but now listening to what's going on in the economy in the United States.
I think the word is codependence. Now, codependence doesn't necessarily have positive connotations, but it clearly is the case. We have China, who has been certainly helping us feast on with supplying the dollars that we need. On the other hand, so they're enabling, if you will, and so I think what they're doing is finally saying, hey, let's take this a little slower. So they're trying to become less an enabler.
All right. What about the U.S. stock market? What's your thought there? Because you said, I think it was like a 1,022 close on the S&P 500. We closed above that. If we closed above that, are all bets off? We're going higher?
I believe we are going higher, but I believe we're going higher in a begrudgingly way. But nonetheless, we would be going higher. And the issue here is that we've been fighting. And you and I have been chatting. We've been fighting for the past 3 weeks at a couple of very key levels on the S&P, on the NASDAQ 100. It was 1608 on the NASDAQ 100 and 1008 on the S&P. What typically happens is that you have people fighting, and once the winner is declared, shorts get squeezed, and people who are late entry, if you will, say, "Oh, I've been wrong," and they step in and buy it. That's essentially what we've had here today.
So a momentum trade, do you think, is coming?
It's a momentum trade. I think the market on the S&P, I think the market can trade up to its final, if you will, retracement level, which is 61.8% of the bear market, the last move we had in the bear market from 1303 down to 666. So that level turns out to be 1,061.
1,061.
On the S&P.
On the S&P.
1722 on the NASDAQ 100.
Well, we're going to have to watch those levels. We're also going to have you back in the future to follow all this for us. I appreciate you coming in, Dennis Hines from R.W. Pressbridge, giving us a technical market look of what's going on. Appreciate it.
My pleasure.
Now.